Okay, so today I'm going to quickly run down what is normally shown on your payslip. On your payslip, you will normally see your salary. Your salary is the amount of money that you have earned in a calendar year that is not tax deducted. So in Australia, there is a way to calculate how much tax is deducted from your salary. That is using the tax bracket table. So on the tax bracket table, you will see that between $0 and $18,200, you don't have to pay any tax on this income. This is applied to all the income. So if you are making around $70,000, you will need to minus $18,000 and $200, $18,200 from that amount, and the rest of the income will be taxable. So depending on how much money you have made, there is a certain threshold that you will fall under. For example, if you are making $70,000, you will fall under the third category. So that is the salary between $45,000 to $135,000. In this category, you will pay about $4,288 plus 30 cents for each dollar over $45,000. So what that means is that in total you will be paying around $11,788 in terms of tax. So the total amount of money that will be going into your bank account will be $70,000 minus $11,788. The good thing about Australia is that we don't have to pay all this big amount of tax in 1 year at the end of the year. You pay what is known as the pay-as-you-go tax. So you also have on your pay slip your net pay. Your net pay is the amount of money that you have earned during one pay period. So that could be either weekly or your fortnightly. So your net pay is usually the amount of money that is going straight into your bank account and that is already taxed. So as I mentioned before, we pay in Australia pay-as-you-go tax. Pay-as-you-go tax is the amount of money that is taxed after one pay period. So on this website, paycalculator.com.au, it will help you calculate how much money you will pay on your pay-as-you-go tax depending on your salary and how much money you are making each weekly or your fortnightly. If you're a student or if you have any debt with the government, you also have to pay on top of your tax what is known as the STSL component. That is your study and training support loans. These include your HEX help, student loans, or any government-funded study loan. So this is the amount of money that you pay each pay period on top of your tax to the government to repay your debt. One thing that you also have on your pay slip is your superannuation. So superannuation is the amount of money that your employer, not you, pay for your super. That is usually 11.5% of your earnings every pay period. That means that your employer will pay about 11.5% of your income to your super of your own choosing. That way that once you retire, you can take the money from your bank account, from the super. You also have annual leave hours on your pay slip. Usually this comes in two categories. It will normally tell you how many hours you have earned in total and how many hours you have earned in this one pay period. In Australia, if you are a full-time employee, you are entitled to a minimum of 4 weeks of paid annual leave per year. That is usually amount to about 152 hours per year. Thank you.